Hello dear viewers, my name is Rakesh and I'm your host here with the webinar topic Euro USD and GBP USD technical analysis. Today it's a live analysis and I'm community member, not a discussed copy employee. All the views or opinions or the trading ideas discussed in this webinar of my own. Sorry guys, I'm supposed to tell you all this every day. I know it is a boring thing, but still we have to do this as a formality. And as the name suggests, we will be carrying out the technical analysis of the euro against the US dollar and the British pound against the US dollar. And if the time permits, which is of 30 minutes or so, we will also carry out the technical analysis of other major pairs. In this particular session, we will be strictly talking about the technical aspects of trading and ignore all the fundamentals. As a technical analyst, I know that every information, whether it is political or fundamental, is priced into the chart. So we will try to follow the charts only for analysis. Okay, and in this program we will be using only the candlestick charts. We will try to find out the key levels and then trade from them. And if you are new to the technical analysis, I would request you to go and check the playlists in this channel where you will find candlestick patterns and profitable chart patterns that will help you to understand what we are talking here. So it will help you, of course, in understanding what we are talking here. And at the end of the session, I'll be taking the questions from the viewers. So I request you to keep them all the way up to till end of the session, or maybe you can ask your questions in the chat while I am talking about the charts, and maybe I can answer them when the session ends. Last but not least, everything that I say in this webinar is for information or knowledge purpose only. You have to do your own research before you put your hard-earned money on the line. MGA, hello everyone. Damien, hello. Hello MGA and hello Damien. Welcome to the stream. You are my daily viewer. I love you. Okay, so to begin, actually I have to go through the risk disclaimer. Before I show you the risk disclaimer, today actually I want to share with you one scalping strategy also. Now, I'm not sure whether you are interested in long term or short term, but I have a strategy that works on 1 hour chart and 4 hour chart. And today I will try to share it with you and will make you understand how that works. You can just observe it and follow it if it suits you. Okay. Ben Okoro, hi. Hello, Ben Okoro. Welcome to the stream, bro. Okay, so we'll switch to the risk disclaimer. Here is the risk disclaimer. It is a simple disclaimer stating that trading foreign exchange on margin carries a high level of risk. You should actually trade on lower margin or no margin. Okay, and it is not suitable for all investors. You can lose all of your money if you go like you take wrong trades, and whatever the results we are showing here may be simulated or hypothetical, or you will see a lot of times I will use the word maybe, may go. Okay, probability, possibility. So it is not for sure that the things will go the way I say here. Okay, so never take a trade based on what you see in this video. I will not be held responsible for any losses that occur in your account. You and only you are responsible for deciding if you are comfortable accepting the risk involved in forex trading or not. But I will try to help you find that thing, whether it is a good risk or it's a bad risk. Okay, without further ado, let's hop on to our chart, which is the Euro USD daily charts. Sometimes actually I have observed that if you kind of follow the daily charts, they move very slow. It takes 24 hours for the candle to end, but yes, it is a solid candle movement and it helps you in reading the chart more clearly than 4 hour. Of course, 4 hour is also a lot of information, but it is confined to only 4 hours, whereas daily candle gives you information about the entire trading day. So it has more information than the 4 hour, but it takes a lot of time. Some people don't have that much of patience to to wait for the candle to end, and they tend to take the trade. Now today I am going to tell you what wrong can happen if you do not wait for the daily candle to close. You see, focus on this area here. I will switch it to 4 hour now. Okay, in 4 hour it looks like the candles or the price is taking support at this rising trend line of the symmetrical triangle. Does not it seem like? Yes, and it seems like the price has closed outside the symmetrical triangle. In this case, anybody would like to open a buy position here with the target to the upside. But if you switch to the daily chart, you will see that no, it is actually giving you a bearish pin bar, and that too at the resistance. So it is entirely different scenario. That is why I'm saying the daily noise, or you say 4-hourly noise, will be filtered if you see the daily candle, and this noise will be filtered if you watch the weekly candle. Okay, on the weekly candle you will see a bearish pin bar forming at the resistance. So this bearish pin bar is suggesting us that there is a possibility that the next week price may go down, but the weekly candle has not closed yet and daily candle has not closed yet. There are still 8 hours and 53 minutes as of UTC time for this candle to end, and for weekly candle we have more than 3 days. We have more than 5 days, 8 hours and 53 minutes. So you understood now that if we are looking for a bigger time frame like weekly here, and we are seeing this weekly line, we need a close below this line on the weekly chart, and if we are looking on the daily chart, we need to see a close below this line on the daily chart, and so on and so forth. But more you go or dive deep into the candles, like daily to 4 hourly and 4 hourly to hourly, hourly to say 15 minutes or 13 minutes, you get more and more noise to trade. So you want to avoid that noise, or you can say in the other words, whipsaws. You don't want your stop loss to get triggered because of some sudden movement in opposite direction of your trade. So yeah, I hope you got it. So now what we can expect here, if the symmetrical triangle is broken, the price has of course got a lot of support in this region of 1770 to 1750 region, and it has also given us the bullish pin bar which closed higher than the previous levels of support and resistance, that is 1.1840. So what is the possibility here? The possibility is right now the candle is very bearish, and it is suggesting that now the sellers are in control of the market, so they would love to go back to 1.1840 region for the first, to test it as the next support if the buyers come in here. But I don't think that the buyers will come here. I think that the buyers will try to grab another price at around this weekly line, or maybe at the lower wicks of these two pin bars here. Why? Because I will not like to buy here, because my risk to reward will be huge. Like risk will be almost in case some healthy people try to buy at these levels, they will think that the risk is almost 95 pips, 95 pips, and the recent high will be around here, which is 68 pips. Nobody is going to take that risk. Of course the newbies will take this risk because they would love to take only 10 to 12 pips here and get out, and they don't get out, and then they burn their hands. Okay, we will not talk about that. We'll just talk that now buying at these levels at 1.1840 is not a good idea. But if you get a price near 1.1790 to 1.1750 region, this region, I think that will be a good idea to go and buy this pair. But right now buying or selling both are not recommended. Why selling is not recommended? Because support is close. And why buying is not recommended? Because stop loss is very far. I hope you got the idea. Okay, on the upside, if the price reverses from here and closes the candle higher than this symmetrical triangle, then look for the 1.1975 as the new resistance for the price. Okay, I will go quickly and see what is here on the 4 hour. There is some noise on your mic. Oh, I'm sorry, my window is open. I'm so sorry. I'm so sorry, my friend. Just give me 5 seconds, okay? Thank you. Thank you, Damien, for notifying me. Actually, my window was open. I did not notice it, and there is a lot of wind blowing outside. Okay, so I hope that the noise is not there now. Is it? Hello? Okay. I don't think that the noise is there now, but still I will put a filter noise suppressor. All right, now there should be no noise. Is my voice through? Perfect. Okay, so here we go. So I was saying that yeah, so to the upside 1.1975 is the possibility for the price to go on the upside, and on the downside we have recent resistance at 1.1840, which may act as support. And if that does not hold, then there is a possibility that this rising weekly line will act as a support for the price. Okay, but to me still this is like no noise now. Okay, but to me actually still this is holding, because we can make it like this also. Okay, till the time this low here is not broken, this pattern is intact. There is a possibility that after some time the pattern may, you know, break to the top side from here, like, well, that only the time will tell. There is a possibility that something like this will happen. Okay, so do not try to open any position in this region here. Let the price to break out of this region. Talking about the Great Britain pound, this is a daily chart, and you see the falling channel that we have made. There are actually two falling channels. One is the bigger one. This is just because we are speculating, or we are saying that there is a possibility that lower high will be formed in this region, and this lower high will be confirmed only when we see a lower low than this area of around 1.3600. It is actually 1.3572 to be sure. And you see, after closing below this 50%, that is 1.3911, see how the price is facing resistance when it goes back to this region. Now this is more clear on 4-hour. After price closed below this, every time the price tries to go up, it is meeting with the resistance, and the price is going to go down. Now if this low here, which is sitting at around 1.3876, is broken, you see from here the price got some buying, and then price is again back to this region. Now if this region is broken here, then we may expect 38.2, which is 1.3831 region. This is the first support, and the second support will be around 1.3732. Why I'm not saying these random numbers. I'm saying this number just looking at the Fibonacci retracement, because I can also see this was a previous level of support in the past, at least these 3 times, or in 3-4 hourly time, testing these levels. See, so this is just a possibility, and if that is broken, then we have all the way 1.3670 region to test as the fresh support. But see, because we have already mentioned that this is a downtrending market now, so we can also expect this falling channel support line to be tested in the coming days. Of course it will take time, but this is also possible. It is no longer there. What is no longer there, my friend? Ben? No noise now. It is no longer there. You are talking about the noise? Anyways, let me know what you are talking about. So we'll focus on the New Zealand dollar. Okay, it is no longer there. No noise. Good. So to the upside, we have resistance at around 1.400. This is also a psychological handle, as well as it is 61.8 of the previous fall, and we have 50%, which is below which right now the price is trading at 1.3892, just like 18 pips shy of this 1.3910 region, which we were expecting to be a resistance, although the price did not attack this area did not act as a resistance. But you see, after falling below this has acted as a resistance for the price when it tried to test this level. Okay, I will switch this again to 4 hourly, and you see, okay, now the next level of support, why I'm saying that 38.2, because one is that this was the Fibonacci retracement of 38.2, and see how good it aligns with the previous resistance here, here support, and here it was resistance. So what do you think, when the price comes back to this area, will it get respected or not? Because we are talking about the 4 hourly candles, so I am expecting this level to get respected, because 4 hourly candles are respected. 4 hourly resistances and supports, they tend to coincide with the supports and resistances of the daily charts. So if you switch this to daily charts, then also you will understand that this level here 23.6 and 38.2 was the level of support and resistance in the past. So these are the levels that you would want to keep an eye on when the price goes to these levels. Of course, when the price goes here, you are not going to buy. When the price goes here, you are not going to buy. But instead, you can use these opportunities here as a selling opportunity with the small stop loss higher than this bearish pin bar, and you can target the 1.3670 regions. But does your risk to reward risk reward ratio satisfies this? We have 50 pips of stop loss, we have approximately 200 pips of take profit target. But if I would be here, I would not open a position right now. What I would do instead is that I will keep a buy order, pending sell order below the low of this candle here. You see this bearish pin bar here, below the low of this candle, approximately at around 1.3874 or 1.3872. I'll keep my pending sell order with the stop loss above this candle's high, that is 1.3942. So in this case, my sell order will be here and my stop loss will be here. I'll be risking 71 points here, and I'll be targeting at least 180 points here. But it is not actually good risk to reward ratio if you consider 1:3. But yes, it is at least more than 1.2.5 1.25, sorry. Okay, 1.25, sorry, 2.50. What I am saying, I think I am gone mad. Yes, 2.50, sorry. Okay, the supports and the resistances we have calculated here, and we will move to the New Zealand dollar. About the New Zealand dollar, we have seen that there was a descending triangle. The price moved out of this triangle, went back to this area to test it as a support, fresh support. It is actually more clarity on the 4-hour chart. See, the price went out, tested this resistance of channel, and then came back to test this level as a fresh support. This held as support, price went back to test this previous resistance region, came back all the way to this 0.6976 region, and now is again taking support. You see, the pound and euro USD is actually falling against the US dollar. Okay, euro is falling against the US dollar. It is trading at its bottom. Pound is also doing almost the same thing on the 4-hour. But see how New Zealand is trying to gain in front of as compared to the other pairs. So that is what I was trying to say last week also, that New Zealand dollar looks like it is positive, looks like it has more steam in it to go up. So I'm expecting this pair to outperform than other pairs, or sorry, other currencies. So you can say yes, I am bullish in this one, and I am expecting actually this to go up and up. But it doesn't mean that you should buy here. No, you can buy, but not now. What you can do now, you can again put a buy stop order in this one like this. Since this is the high that price has recently made, you can open a buy position after this high is broken, or you can say 2 points above this, and then you can keep the stop loss wherever the next low is formed here. Okay, and you can target, first target will be 0.7043 and 0.7104 the next time, or you can wait all the way for the price to go up above this, then come back and retest this level as the fresh support, and then you can target 0.7104. But this is a bullish bullish market, and I am expecting it to go up now. Okay, at least till 0.7104 region. But instead we have to also talk about the downsides, that if the price starts going down from here, then this rising channel support will be a dynamic support for the price. This falling triangles resistance line will act as a support. Then this horizontal levels that we have drawn from all the way down from 0.6897 to 0.6920, I mean the noise. Your chat is coming so late. I think yes. Benakoro. The noise is gone. So you got the idea about the New Zealand dollar. If you have any questions, please let me know in the chat. And yes, USD JPY, very interesting candle forming here on the daily chart. Why? Because it is breaking below the level of support that we were talking, and it was actually the recent support here when the price moved from all the way 109.97, or sorry, 109.06 to all the way up till here, that is 110.59. So it was approximately 150 pips of move after the price got rejected from here. But this time the price very easily went below this and is now trading at 109.02. If the price fails to close above this level, then we can see more sell off in this pair, and the price may even expose the area of 107.47, which is weekly upswing pivot. That means if that is broken, then the pair will go to the downtrend again. So to keep the momentum on the upside and the uptrend intact, the price needs to get support at around 107.47 region. So friends, to the downside, the next support is 107.47. On the upside, the resistances are huge. First is at around this rising channel resistance line, which as on today is at around 111.56 levels, and another resistance to the upside is around 112.18 regions. Talking about the buying and selling this pair, buying, if you want to buy this pair at the current levels, you can take the risk, but that is really very risky because the last two candles are red in color, although it is sitting right at the support, and the stop loss will be very small in this case. But do you really think that this pair will go high? Because the pair is making higher highs and higher lows, but after making this high, the pair failed to make a higher high here and got rejected at around 110.58 and has already made a lower low. So I don't think it's a good idea to open a buy position here, but instead what we can do is we can change this channel from here and include this high here, and this will give you a better position or a better idea of what is going to happen. Yes. Perfect. So let us see that this is followed or not tomorrow. Right. Now talking about the USD CAD, US dollar is very strong as compared to the Canadian dollar. We can see, but USD against the Japanese, no. That means Japanese yen is the strongest, I think, right now. So what you can do is that you can trade across. That is, US dollar is strong, of course, and Japanese yen is even stronger. That means if Japanese yen is stronger, so you find out which is the weakest currency. Here, looking at these particular currencies, it looks like euro is the weakest currency here. So euro JPY is the pair which will be falling a lot. This is what I am expecting. So just a matter of correlation. So you see, euro JPY is falling a lot. Why? Because euro is weak, Japanese yen is strong. So you see what happens. Okay, but we will not talk about this. First we will talk about the USD CAD. Why? Because US dollar is strong here and the Canadian dollar is getting weak as compared to the US dollar, and it has come out of this falling channel and is going to meet the previous broader channel and its support line, which may act as a new resistance. Now the daily candle has not closed yet, so we are not confirmed, but on the 4-hour it looks like this support is trying to act as a resistance, some resistance, and also see how beautifully it is going to be aligned with these previous resistance levels if the price tends to keep moving in this area for a few hours more. Then 1.2604 will act as a good area of resistance. Also, if I try to include these all congestion price highs, then this will come out to be 1.2582 regions where the price is already trading almost. I will just remove it. It was given for the understanding. So now I am expecting that the price will reverse from here to 1.2528 regions again, almost 30 pips to the downside. And if that sell off is huge, then there is a possibility that this low at around 1.2421 is broken and the price may tumble down to 1.2364 regions for the first target, and then eventually maybe even to this actually falling trend line, which was the resistance previously. You see on the daily chart and the weekly chart, this was the resistance, and this may now act as a support in case the price goes back to this region from here. Okay, so this line may act as the fresh support for the price if the price starts falling from here. If not fall too much, then at least some rejection we can witness right now at this price. Okay, upside, this rising channel support line will act as resistance. If that is taken out, then 1.2646 region may act as resistance. On the downside, we have this recent lows as a support, and then we have 1.2364 region as the fresh support. If that is taken out, which will be maybe after 2-3-4 days, then this falling trend line, which was there a long trend line in the past, may also be witnessed as giving support to the price in the coming days if the price comes back to this region again. Okay, on the structure point of view, the structure of the market here is down, up, down, up, down, up, down. Okay, the price has failed to make a lower low here. Okay, the price has made a lower low here. So the price has made a lower low, so this may be a double top formation here, or maybe the price will enter this resistance zone of 1.2914 and 1.3015, and from there get rejected to the downside, which is a possibility. Just I'm talking about a possibility because this was previous support in the past and may act as a resistance this time. But if for some reason US dollar gets stronger against the Canadian dollar and the price goes up, then expect this region to act as a very good support for the price, and it may push the prices back to the recent highs of 1.4689 on the daily charts. Okay, talking about the USD CHF, this is the last pair, major pair that we discussed. This is perfectly moving, obeying all the technicals. You see, fundamentals move the markets. It is a very well said. Fundamentals actually reasons move the market, but the technical reasons stop the market. So if you think that the price is now going down, so where will it stop? It will stop at the support. So the next support is sitting at around, right now is sitting at around 0.9045 to 0.9050 regions. Okay, and already price has started giving us signals of getting some support in this region here. So expect the price to move in this area like this and then eventually break up or break down. We have conditions for both the things. If it breaks up, we are not going to buy, but we are going to look for a selling opportunity when the price strikes this long-term falling channel resistance. Okay, and if the price goes down, then we are going to look for selling opportunity when the price comes back to this region again, because in that case this will be a confluence of resistance. One is this rising trend line and the one will be this horizontal line, which was the previous resistance and support in the past. All right, and talking about the Euro GBP on the daily chart, it is still holding. This weekly line is still holding. The price is trading above it, but eventually it may break or not break. We are not going to speculate it. Let us see what happens. But it has already seen the bullish pin bar, and or otherwise you can say the spinning tops right at the support level. That means the price today or tomorrow is gonna go up in the direction of 0.8670 if some fundamental news doesn't come out. Talking about the gold, we have a few minutes. We can talk about the gold also. It is still moving in the channel. On the daily, on the 4 hour, it looks like there is some indecision in the market. The price was trying to give the bullish pin bars, was trading up, then eventually on the next candle it gave us a bearish pin bar. Now the trap price is going nowhere, because everybody want to see where the price goes, then they will maybe enter the market. But right now the price is sitting at very close to the support of a rising channel, and expect 1834.39 to be achieved in this soon. But if eventually this rising channel support breaks, then 1795 will be exposed. Talking about the CHF-JPY, this is also a classic example of not following the 4-hourly candles and wait for the daily closes. You see here there was a bullish pin bar, one would have opened a buy position with a stop loss here. But yes, this would have been a failed trade if you have already taken, but it doesn't mean that you will go it in a wrong way, or you say this is actually a classic example of a failed trade. I would definitely have gone and opened a buy position on the high of this candle and kept my stop loss below the low of this candle, but it would have been a failed trade. But it doesn't matter, if we fail in one trade, we should not lose more than 1% of our capital. That is our target. But if we win, the price would have achieved 122.53. In that case, we would have how many percent? You see, we would have achieved almost 180 points. But right now, how much have we lost? We have lost almost 25 points. So 180 points and 25 points, rest is all mathematics. You can see 1:2 more than 1:7 risk to reward ratio, which is a good thing. You just have to be right 2 times in your 10 trades to be profitable if you take such trades. Okay, so this is all about this. And Euro GPY, I have already told you that it is in a sell mode, because Euro is the weakest currency that we have discussed and Yen is the strongest currency that we have discussed. So I am stopping it here. In the CHF JPY, on the lower side 119.96 is the next support, and on the upside this recent highs, the price will try to test these recent highs again, 121.16, if it starts going up. With this, I think I should finish this webinar. Yes, but before this I told you that I have a bonus thing for you, so take a note of it, or you can rewind and use this webinar as this thing. Okay, what we're gonna do is that we're gonna switch to 1 hour. Okay, any currency commodity for this matter. I think we will take Euro USD only. Okay, GBP USD. Okay, first of all, what you have to do is you have to put EMA 8. Okay, then you have to put EMA 34. Okay, EMA 34. All right, so these are two EMAs, and then you place one more indicator, that is MACD. Okay, and then you put one more indicator, that is RSI. Now I cannot even stop using RSI, but I will tell you why I need it. RSI. Okay, so idea is that if the price, okay, first I will tell you the theory, you don't think about it, what is happening. Okay, first you just think what I'm saying and listen to it, and then think about it or imagine about it in your mind. You have to see that 8 periods exponential moving average is above, trading above the 34 periods moving average. That is 8 periods exponential moving average is trading above 34 periods moving average. This you have to imagine in your mind. Now you have to imagine that the price is even trading above the 8 periods moving average. Then eventually there will be a pullback after a rise, and the price will come back to the 8 periods moving average, and maybe in between the 8 and 34 periods moving average. When it does so, it will tend to move out of the 8 periods moving average again in the direction of the trend. And when it does, you have to check that the candle closed is above the 8 periods moving average, and it has closed higher than the previous candles opening and closing prices. And yeah, that's it. Okay, so now I'm showing you the charts, and you have to see it in action. So you see, okay, and only one condition is that you have not to open a trade if there is a crossover of 34 EMA. Okay, crossover means if the candle closes from one direction to the other direction on 34 exponential moving average, first time you don't have to open the trade. Okay, so here is this. So the trend is up, 8 periods moving average is trading above the 34 periods moving average. Yes, the video is only showing the start screen, not the chart. This was done intentionally, Damien, because I wanted you to imagine the things and then I would have shown you on the chart. So actually I have started showing on the chart again. So 8 periods moving average is this. It is trading above the 34 periods moving average. One condition is fulfilled. Second condition is that after trading for some time, the price comes back within 8 and 34 periods moving average, and this happens here. And then we have condition that the price should move above 8 periods moving average and close higher than this. This has moved and closed higher than 8 periods moving average, but it does not fulfill the condition that the price should have been higher than the previous candle's close or open. So that is happening here in this candle. Now this candle is closing above 8 periods moving average. It is above the close of the previous candle, and 8 periods moving average is trading above 34 periods moving average, and this is not the first time it is happening, it is actually second time that it is happening. So if you open a buy position here, you have to look for the recent low, which is here, and keep a stop loss here. Okay, keep a stop loss here. It will be approximately 20 points for you. So you will target 3 times of this, which is 60 points. So you will target 60 points and then you will close the trade here. Even if it goes for 600 points after that in your direction, you don't have to look for it. You will just look for the 60 points. That is 1:3 risk to reward ratio. This is one example. Actually, this thing you can do anywhere on the chart. Okay, you should have a trend in the market. This is, now you might be thinking that why I have taken MACD and RSI. If you are going to take a trade, you have to look for what MACD is suggesting. If MACD is below 0, it means that the sell-off is happening. If the MACD is above 0, it means a buying is there. So you don't open position in the opposite side. Like if there is a sell-off happening here, you will not be looking for the buying positions, you will be looking for the selling positions only. Like here the price went below 8 periods moving average, came down to below the 34 periods moving average, then the price eventually went inside this, and then the price eventually closed below this, and also it closed below the closing or opening of the previous green candle, and your sell position is at the close of this candle, which is at the opening of this candle. Your stop loss will be higher than 2 points higher than this candle's high, and your take profit targets will be the 3 times of whatever you are going to risk. In this particular example, it will be like if you sell here at 1.3993 and your stop loss is around 16 or 17 points at around 1.4010, then your take profit will be, if you are risking 16, you have to get 48 at least. So this will be your approximate target, 1.3942 or 1.3945 region. So that's it. This happens most of the times, but you have to be only right 3 times out of 10 to be profitable in this, but it happens most of the time. I will suggest don't start trading this strategy, but observe it, and then when you are confident about what you are looking for, then open the trade. And when the price goes nowhere like this, do not try to find a trending market when it is not there, because a trending market you don't have to look for. It is simple. If the price is going from the left bottom of the screen and is ending at the right top of the screen, then it is a trend. Okay, like this is a trend, this is a trend here. Okay, you can trade this market, but if it is like this, it is not a trend. So you should not be looking for any trades in this market here. Okay, this is a trend here, but this is not a trend. Okay, so this is a downtrend, so you can look for the sell positions. I hope you got the idea. Yeah, that's it. If you have any questions, you can ask me. If you want to rewind this webinar and watch it again and again, and then you get to have some questions, you can ask me in the comments. I will be ending this webinar. I hope you got some idea about the support and the resistance levels that are of interest in the coming hours and days. Please just keep in mind to never risk more than 1% of your capital on any single trade, and look for a potential profit of more than 3 times the risk that you are going to take. With this note, I shall end this webinar. Please press the like button if you find this video useful for you. Leave your suggestions in the comment sections and consider subscribing to the channel for more such video. And if you really think that the information that I share here, which is actually my hard work of almost 16 years now, so if you think that this information can be useful to any of your friends, family members, or the people that you share tea or coffee with, they are in this field, they want to learn, they want to know how the things happen, what is the psychology of a trader when he opens a trade, please share it with him. It will be beneficial for him also, for us also. We will have more interactive sessions, more people to ask questions, more transparency in what we talk here. So you can join the Duke's Copy Forex community, where there are so many things for the forex traders. The link is there in the description. Have a profitable day. Thank you very much for watching. See you tomorrow. Yeah.